For a longer term perspective, we are going to look at the, we're going to look at indexes, of course. So let's just dig in here. There's 12 of them. And we begin with the Nasdaq Composite, which goes back to the 70s. And we zoom on in. And we can see, and you know what, I just kind of, I spy with my little eye. Is that how it goes? Let's just rough out something here. That's not quite it. Something like, just kind of messing around here. Where would this go? Something like that. So what I'm trying to illustrate is there are instances where, for example, here, and here, and here, and here, we have a failure of these wedge patterns, and they create a drop. And after the break, you know, the bulls are going to fight back. The bulls fought back here. You can see we got quite close to the underbelly of that line. They fought back here quite mightily. So it broke, they fought back, fell really hard, they fought really back. And that's what's going on here as well. We got a failure and they're fighting back. But I think there's a lot more of a draw to the downside than the upside here. And I think that's kind of a theme we're going to see because Friday sucked. You know, Friday was a very strong up day in sharp contrast to Thursday, which was a nice tumble. But my supposition is that we're going to see some weakness resume, hopefully immediately with the new week. The Dow, we zoom in on this, and the tippity top was way back a month ago on the 4th of December. And it fell about 3,000 points. Seems hard to believe, doesn't it? But since the big crash here, this little miniature crash, it's been range bound. So we've been banging around here, and we're kind of in the middle of the range right now. But we have punctured the election day gap. We have done damage, punctured also the trend line going back to Halloween 2023. So there's definitely some splintering going on. Nasdaq 100 is obviously kind of similar to the Nasdaq Composite. And in this case, the trend line was the August 5th trend line, which damaged a little bit here, broke, clawed our way above it, fell hard, and then for the first time in about 5 days, tried to push back. But I say again, that trend line is the bear's ally because it's broken. Here's the OEX, kind of the same idea with a broken trend line. And we are a long ways away from even the election gap, which is, you know, not a terribly hard thing to fill, I don't think. Russell 2000, I believe I described this as the existential threat to the bears. Interestingly enough, see the tippity top on this was 245885, like 38 months ago. And we zoom in here, and it was 2466.49. So it got just a touch higher. Let's review that again. So 58.85 and then 66.49. So that's like 8 points with a 2,500 point index. So whatever fraction of a fraction of a fraction that is extremely small. So essentially double topped here. And that's not even taking inflation into account, which has been very high. So in real money terms, this was much, much lower than the other high. But after we peaked here, it fell really hard. And then for like 10, 11 days now, it's been grinding away. Here's the SOX, the Semiconductor Index. Annoying as all get out. It has been banging within the symmetric triangle since friggin' July. Half a year. It is bang, 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 made tighter and tighter and tighter, less and less volatility. needs to resolve one way or the other. I don't care as much as I used to because I disgustedly dumped my ARM and NVIDIA puts, which probably guarantees it'll collapse. But I still have NXPI and AMD puts. Plus, if this thing breaks out to the upside, that would be, as if they needed it, yet another benefit to the bulls. But that triangle merits attention. S&P 500. Here we broke this beautifully. So it snapped it here. Perfect tag here and here. Another tumble. And then a completely annoying, and I imagine we'll realize eventually, futile and unnecessary counter trend rally on Friday. Dow Transport. This is a failed bullish breakout. This is no longer the ally to the bulls that it was. Back in November, it seemed that there was nothing that could stop the bulls at that point. This is completely puked. So that helps. Dow Utilities, of course, there's our failed diamond pattern, which stunk. But after the failed diamond pattern, we were banging around here. It pushed beyond this wedge, but it's re-entered it now. Kind of interesting. So it fell back into the wedge and it pushed right near the upper portion of that wedge. Plus, we've got this cute little top right here too. So I think this is exhausted at this point. The VIX, kind of a creature unto itself, of course, unlike the other items. The VIX is pathetically in the mid-teens again. As I feared, this spike was really the end of the excitement. It was over way too fast. But as I've discussed in the past, if you look at the distances between peak, 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 and peak, it's extremely consistent, which is also kind of a drag, which would mean we're going to have to wait a while for another, rock and roll session. XBD, it's got a little bitty top here, pushing somewhat into that. I say again, And just to end on a better note, XOI, I find this very exciting. This is the oil index, and I believe we have the makings here of a really glorious top. And it has been quite strong of late. Let's change this to a candlestick to see that better. Look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9 green bars in a row. The most recent 3 of which were big old fat bars. Big gains. Yet we've got this Himalayan mountain range of overhead supply waiting here. So I think I'm most enthusiastic about energy on the short side. And that's the end of the show.